Good evening. Ira Epstein with your metal market. Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Tuesday, the 24th of June, 2025. And wow, I want you to sit back and just think of all that's gone on in 96 hours. Saturday, the bombing of Iran, right? Okay, the counter bombing that's going on with it. All of a sudden, we get on Monday, all right, a potential ceasefire, and today there is a ceasefire. Will it hold? I don't know, but it's gone a long way. Israel opened its airspace already. So this is all pretty important. I think Iran will open theirs right behind it, and I think people might be coming to their sense. The problem, and there is a problem, what happened with the U.S. bombing? Are the centrifuges taken out? Nobody said to me that they are. I'm not reading it anywhere. In fact, I read a New York Times article that said that the bombs did not take them out. Where's the 900 pounds of uranium? These are things that have to be answered. Otherwise, you could flip a switch and be right back in the war. So you have to understand where you're at. This is not, I got my arm around you, we're all brothers, this thing is solved. It is not solved until more things get known. I know you don't want me to say that, and I get it. We'll talk in the financial markets, why the stock market rallied, what's going on there. But in the metal markets, what's basically taken place is you had a big correction because you took, for the moment, a war premium out of the market. Now, what will make gold in the end come back and silver will be industrial growth at some point and inflation. Those are two things we have to be looking at. But for the moment, what has taken place is just like in the energies, you went down $15 in crude oil. I mean, that's not a small break from its peak. That's a monster break. It might have been a bigger one. Remember when it went to zero, when Russia and the Saudis got into the price war with each other, I'll call it. And oil, for all purposes, if you had storage, you could get it for zero. Well, this was another one of those events. So we'll talk about all that when we get into some of the financial markets. Right now, take a look at what you're going to have. Tomorrow you're going to get the Mortgage Bankers Association numbers. They come out at 6 in the morning. New home sales will come out at 9. And at the same time, round 2 of Fed Chair Powell, now he'll be with the Senate Banking Committee. Today he was with the House and answering the questions. And very simply, to wrap up what he said, he is got an open mind. If the market needs a rate cut, it will be there. He doesn't see it right now. I've just given you 3 hours of testimony. You don't have to believe me, but that's it. We had the API numbers come out. You took a draw on the stocks change of 4.2 million barrels. Gasoline stocks went up a little bit, and you took down the distillate stocks. Okay. I don't think that even matters. I think the market's looking beyond that and looking at a market that if peace can come about, maybe this market is seriously oversupplied still in the energy market because the Saudis want to put out more oil. We can put out more if we had to. So got a lot of things that are going on right now that we should pay attention to. As for the dollar, it got hit today. No surprise there. I'm still have an open door for that 90 area. In the gold, do you remember I was talking to you that we could go to 33.13 just the other day? All right, it's only Tuesday today. We were just talking that, and you'll see why. So let's go to the charts and take a look. First, you're down 1.5% for the week. The market on a weekly basis is still well over the 18-week average of closes, which comes in at 31.98. When we look at the August gold right here, you see a market that has broken itself down. The pattern is lower highs on the swing line, lower lows. If you haven't taken my charting course on this, I'll show you at the end of this what the course teaches. And this is how you learn to do these. You can even draw them by hand, and that's how you really learn them. But then we have the suites of the software that you can use too. So trend down unless and until you take out 34.1380 now. What else? The market, 18-day average, first move under it. So you have areas that could be support. One of them's 3187.40, the other's 2970. But the number that's most likely going to be it is the Bollinger Band, and that came in right here. Now, if we back up a little bit, last night, this is what the market looked like. And I was looking for the market, if it broke down, and I didn't know if it would break down that much. If it does, the Bollinger Band's likely the next support level. You tell me what happened. We went right to it, and that's what you're holding. So what the market has done in gold is it's now moved itself. For a very long time, it was stuck at the 18-day average up to the upper Bollinger Band. It wasn't trying the downside. And then with the action that just happened, for the first time, you've probed the lower Bollinger Band and found your support. The trend is down. When we go to the next chart, you can see you're oversold. So am I looking for a big break in gold? I'm not. Oversold markets don't attract, in my opinion, new selling. Embedded markets on the bear side would, but you're not even close to doing that. So I think that you had a play where the war premium just came out of the gold market. When we go to the gold-silver ratio, unless you close back over this 18-day average, I look for silver to gain on the gold. And while you've had corrections where it's given up some of that, it is holding its job there. It is unlike the gold and going to the Bollinger Band. It's making its battle at the 18-day average of closes. But there's nothing yet bullish about silver. The pattern is lower high, lower low, prices at or under the 18-day average of closes, momentum still pointing down. To just negate the downtrend, you'd have to get back over 36.65. That would negate it, not start a bull move, in my opinion. The copper market, I'm warning people. I keep reading what's going on at the London Metal Exchange, and it's got all the in the air. Smell that? Squeeze. It's got all the looks of a squeeze play that could hit that, and that would cut off copper that moves around. Remember, we had that potential here in the States, and copper was on its way, so that wouldn't happen. Well, now I'm seeing the opposite there, and this is unusual, but taking place. I didn't recognize it until I read a report from the exchange itself on emergency actions that they had taken last week to force heavy long position people to give up parts of that so they can avoid as much of a squeeze as they can. Why is it happening? Well, if the world's going to be on good footing, copper's in short supply. You know that Chinese mine, remember we talked about it a month ago, it's not online. And I'm talking the one in South America. And that's a huge production. That took away a lot of the surplus that the market was looking for. It flooded due to earthquakes and so on in the area, and now we're looking for the markets to see what it can do. This is an interesting pattern. I don't know that it's tradable. You've got a higher high and a lower low scenario. I don't know what to do with that. In the platinum, this is the market I'm still the most bullish on until the red line here, which is right now at 89.47, closes under 79. As I said the other day, I think the pros are buying the breaks, looking for even higher prices out of the market, and it's getting another oomph in the market because as the dollar breaks down, it gets cheaper. Goods priced in dollars, you can take a stronger currency than the dollar and get better value. You're able to buy more, and that's chewing some of that up. So, and I don't think this is the end of the dollar break. The market's just not acting like a market that wants to lift. It's almost like the stock market. Remember, it got up to these near highs and it sort of ran out of steam, but it didn't break either. Now you're starting to see the NASDAQ trying to make new highs, markets making their moves. You've got to remember how this all plays out over time, and time is the key word here. Getting a little break tonight in this, but we'll talk about that when I get you into the financial section. But as I said, if you haven't taken my charting course, in it, it's all videos. I teach you swing lines, moving averages, slow stochastics, my idea on Bollinger Bands, but after the course, I want you to take another course on enhanced Bollinger Bands, and of course, window envelopes. And people don't know how to use window envelopes, generally speaking. With the course, what you end up getting with all this too, is you're going to get the charting software, you're going to get all the videos, and believe me, there's tons of time on these videos, a lot of videos. And the videos walk you through what I do, and then you get, when you take this, and there's 45 chapters of videos, then what you're going to end up getting is, and by the way, that's all the videos that make up those chapters. 45 videos is a lot. And you're going to learn, and then you get my morning subscriber video, my full research with it, the whole package, 30-day trial to everything. It's quite a value. So if you're interested in learning my technique, you go to iraepstein.com, go under the word courses. It's all waiting for you there, and there's an icon here to take you to that. I'm Ira. You have yourself a great day. I will catch up with everybody in the other videos tonight or first thing in the morning on Wednesday. Take care.